Positive brokerage commentary boosts Apollo Tyres. UBS raises its target on the tyre maker with a buy rating. The brokerage says declining commodity prices may aid margins and expects return ratios to bounce back strongly.
JP Morgan says it's turning more constructive on Indian OMCs as oil marketing companies are bidding HPCL to buy, even as it scales down its rating on GAIL to neutral.
Hero Moto surges as it announces a price hike of up to 1,500 rupees starting December.
Scrappage plan for phasing out government vehicles older than 15 years gives Ashok Leyland a fillip.
Max Financial Services gains on IRDA INOG to acquire remaining 5% stake held by Mitsui Sumitomo in Max Life. A buyback announcement by IEX, meanwhile, leaves the street disappointed.
Very good morning. Welcome to Chartbusters. I'm Nigel D'Souza and joining me today is Ekta Batra. Hi Ekta, morning. Good to have you on the show. Well, that buy on dips works yet again, right? You got a bit of a dip in the morning. The SGX Nifty people were fretting about that. It was down 50 to around 80 points. 90 minutes into the trading session, we're at around 18,550, all-time highs on the cards.
Yes, absolutely, Nigel. No complaining, considering that crude is working in our favor. We have FIIs which are supporting us at this point in time. So it seems as though it is going well for our markets in terms of cues. And despite the uncertainty emerging from China, with regards to the COVID protests, that could probably be, a silver lining for India in terms of flows and what could happen in terms of incremental interest. But nonetheless, that's something of a trend that we need to track over a period of time. As of now, good going for the markets. The Nifty is holding above 18,500. We have the mid-cap index, which is marginally outperforming with a gain of around 0.7%. Shivangi Sarda of Motilal Oswal Financial Services joins in for a technical check this morning. Shivangi, hi, welcome to the show. Well, how would you approach this market? It's steady state, but do you see further upside?
Good morning, Nigel. Good morning, Ekta. Thank you for having me on the show. So we've seen, the Nifty index has been cheered by the bulls and there has been tremendous buying interest at every small declines. So support zones are being respected and we've seen a good uptick from, the lower zones. Now, the global factors are also, convinced and they are favoring us, which is quite positive. And we've seen continuous buying flows from the FIIs as well. So overall, the market is quite positive. We expect, to buy on any declines possible. Both the indices, Nifty and Bank Nifty, have been making higher highs on the weekly frame. So overall chart structure and derivatives data-wise, even backed up by the rollover figures in the November series, is quite positive. So overall, buy on decline to continue. We could see a uptick towards 18,881 levels in Nifty with a crucial support at 18,350. And Bank Nifty, the levels would be 43,500 with a support of 42,500.
Okay, all right. Hi, Shivangi. Good to see you this morning. What about individual stocks? What are you tracking?
So on the individual stocks, as we've seen that, a lot of good momentum in the index, so heavyweights cannot be ruled out. So my first pick would be Reliance. We've seen that, the stock has been making higher highs from the last 4 sessions and continuously, it was facing some cap from the last 3 weeks, which it has now surpassed and it is holding quite well. So with the follow-up buying seen over here, the stock is going to do really well. So my first pick would be on Reliance with a target of around 3,000 zones. And my second pick would be Delta Corp. We've seen a good momentum over here, around 96% rollover, in this stock. Of course, we are heading to the December month and this stock cannot be ruled out. And the kind of buying interest seen over here is quite positive. So with the kind of positive setup in the November series, it is now coming out of its range of the last 8 weeks. And it recently surpassed its resistance of 232 zones and set to move higher. So, a buy over here with a 4% target price over here.
Okay, all right. Thanks a lot for that, Shivangi, for joining in and filling us in with all of those cues. Well, let's shift focus to our special segment now, where we get you a few ideas for profit from Money Control Pro. Nitin Sharma of moneycontrol.com is joining by to tell us about a stock that he's tracking very closely. Nitin?
KPIT is a key beneficiary of growing connected, autonomous, shared and electric vehicles R&D capex by OEM and Tier 1 suppliers. KPIT's second quarter performance was in line with the street expectations, with revenue increasing by 8.6% sequentially, while EBITDA margins slipped by 90 basis points due to wage hikes. Company closed technical acquisition in the quarter that will add 8 to 9% to the FY23 revenue. Technical acquisition is also expected to improve KPIT's EBITDA margin by 50 basis points. TCE win in the quarter was strong, with total addition of $142 million, mostly from the powertrain domain. Management sees two mega deals in work this year. KPIT's FY23 guidance has been revised up, and management now sees an organic revenue growth of 23%, and including Technica, FY23 constant currency revenue growth of 31 to 32%. On the margin side, company expects an EBITDA margin of 18.5 to 19%. So far, there has been no sign of slowdown in the KPIT's business or deal flow. Our forecasts include 2 years revenue CAGR of 31% and EPS CAGR of 33%. At the current market price, stock is trading at FY24 PE of 40 times. Investors are recommended to add stock gradually, taking advantage of any correction.
Okay, time for a short break. But up next, we'll be talking to Sanjay Sethi of Chalet. Welcome back. Well, it's definitely a buzzing broader market. So smaller stocks such as Shriram Properties is gaining. That stock is up around 4.5%. Giving Apollo Tyres company is Seat, so that stock is up around 3.5% at this point in time. Angel One is also doing well, so that stock is buzzing around with a gain of around 2.5%. So a lot happening within the broader markets, you'd have to say. But let's get talking to another company now, and let's in fact welcome our corporate guest on the show this morning. Chalet Hotels is the company on our radar. Remember, the company has posted a strong second quarter performance on a lower base. To understand how occupancy is looking, especially during the holiday season and the outlook at large, we have with us Sanjay Sethi, the Managing Director and CEO of Chalet Hotels, to take some questions. Mr. Sethi, hi, welcome to the show. Well, it is end of the year. There are holidays going on. You did occupancies of around 70% in the previous quarter. What is it looking like? What has it inched up to? And can you just give us a broader sense in terms of how business is looking, say, on a comparable basis?
Good morning, Ekta and Nigel. Pleasure to be on CNBC again. Looking very positive. Business travel is back with a bang, which is extremely encouraging. As far as the holiday season is concerned, our hotels are largely in big cities, so we don't get a major rub-off from the holiday season, but we've done an extremely strong non-holiday season period, especially the months of September. October was decent. This November looking very strong, and that's true for all hotel companies which rely on business travel. Business travel is back, as far as domestic business travel is concerned, to about 190% of what it was pre-pandemic. And if you recall, about 8 or 9 months back on your channel, I'd said that business travel will be back, and what all the naysayers at that time had said, business travel will probably not be back to pre-pandemic numbers ever. So I think that's gone well. Future for the industry looks extremely strong. I'm very bullish both for the business and the leisure segment. And we will continue to explore opportunities in the leisure segments as we continue to consolidate business in the existing assets within the portfolio. We also have a lot of new assets coming in play. Remember, a lot of the capex has been spent, and they come into play in the next maybe 3 to next 15 months. And looks like exciting times ahead for Chalet.
Okay. If you could just quantify what exciting looks like, because, the fear is that while you have said business travel has rebounded, there is fear of a slowing economy as well. So in that context, do you see or foresee any kind of cutback?
Ekta, we don't see anything as of now. As far as the foreseeing part is concerned, I think it remains to be seen what the impact on India is. Remember, I'm talking about domestic business travel here. India continues to be a strong story. And whilst I do expect some amount of impact, I don't expect it to be material. So our growth on our portfolio, I think, will continue to be as strong it has been for the last 2 quarters now. And we expect to actually grow aggressively, additionally, on the back of the new assets coming into play in the next few months.
Hi, Mr. Sethi. Well, you got it right? Business travel has bounced back and bounced back in style. If you could give us a couple of numbers for quarter 3, what's the rough occupancy number that we're working with? You could give us a bit of a range. And the average revenue per occupied room as well. I think the last count that we have was around 5,600, around 5,700. Where is that number headed?
Well, the last count is Q2, where your combined average room rate was actually 7,930, and your RevPAR, this revenue per available room, was 5,650.
Yes.
Overall, I expect that to jump by at least 20% in the subsequent quarters, which are left in the year.
So
maybe higher, actually, the way things are going now.
okay, all right. So RevPAR will move to around, doing basic math, goes up by around 1,000 rupees odd. So around 6,700,
Yeah.
6,800 odd.
I think we should comfortably be in the 7,000 range.
7,000 range. Okay, and what about the occupancy number? You want to give us a rough number out there?
Occupancy will remain strong. See, look, what will happen is, Nigel, in holidays, we do tend to dip a bit. So when we had Dussehra and Diwali in October, the occupancies would dip a bit for all business hotels. But November rebounded like never before, actually. So as we keep going ahead, February, February, March will be extremely strong because there are very few holidays in that period. December will be affected for maybe about the last 10 days of the month when the Christmas and New Year holidays kick in. But first 20 days look extremely strong again. So occupancies, expect them to stay in that mid-70s range. And the ADRs probably cross the 5-digit number in the coming months.
Okay, and you're expecting to probably maintain these margins also of over 30-odd%, what you reported in the previous quarter?
If the growth continues to come like it seems to be coming through ADR growth, average room rate growth, it's bound to actually improve.
Okay. What does that do to your debt levels? Because you sound extremely bullish on your business. You're expecting your average revenue room rate or revenue per available room to move up to around 7,000 odd rupees. You're expecting your occupancy to remain at those 70% levels. What does that do to your debt level, which is at around 2,300 odd crores? Are you in a position to probably, lower it, considering that business is flourishing?
Yes, so if you look at our numbers now, our 31st March debt and September 30th debt is exactly the same. And we put in significant amount of new capex during that period. So we've been able to hold the debt whilst we invested pretty heavily in these 6 months. So clearly we are sort of funding our growth through internal accruals now. We also have a lot of the projects which were underway coming to closure, whether it's the Bangalore office asset, whether it's the new hotel in Hyderabad, whether it is the expansion of the Pune hotel, or renovation of the West Inn in Powai. All these are coming to culmination. And as they come to culmination, the debt levels will fall because EBITDA support will increase significantly. However, we do have 2 or 3 new projects underway. They will require some debt. So we see debt peaking out at about 2,700 at some point of time, but then it'll fall very rapidly once all the projects are monetized.
Okay, all right. So 2,700 crores will be the peak out there. Do you have any non-core assets that you could monetize? If you could give us a sense on that. And your cost of borrowing, RBI has gone ahead and hiked rates numerous times this year. In fact, global central banks have done that as well. Your cost of borrowing could have gone up marginally, right? What is it at as of last count?
Marginally. So our cost of borrowing in September 22, average borrowing was 8.18%. That's up 14 bips from March 22, whereas the policy repo rate is up 190 bips. So
Yes.
clearly we've been able to manage that well.
Okay, and any non-core assets you have that you would...
On the non-core, well, we are primarily a hotel company. 89% of our revenue comes from hospitality. But we've got some complementary assets on the same plots that support the hospitality business, which is primarily in the form of office assets. They continue to be high EBITDA generating assets, and we'll continue to use keep them with us because they contribute extensively to our P&L and balance sheet. In fact, we're adding 1 or 2 more. We believe that their rub-off of the demand that they create to the hotels is very positive, and on their own, they are extremely value accretive. So I think it works for us.
Okay. How much do you expect to finish FY23 in terms of rental income? You did 100 crores in FY22.
I don't want to give forward-looking numbers right now on the old company.
You're sustaining 100 crores.
Some of those assets, the additional assets are still underway. If you recall, our numbers today have to be seen in a certain light. That today, for the last 2 quarters, a mall has been shut down in Bangalore to restructure it as an office asset. So that revenue is not been coming in. We've also got renovations going on at the Westin in Powai, where 150 rooms and the main banquet hall has been out of action for a couple of quarters. That's all back now as far as the Westin is concerned. So all the numbers have to be seen in light that these assets were out of action and they want to come into play now. So whilst our growth is there over even FY20 numbers, that growth could have been much higher if all our assets were in play today.
Okay, all right, Mr. Sethi. Well, you're sounding optimistic about the future and things are looking up as well, to be fair. Wishing you all the best for the Q3, and in case we don't speak getting into the new year, all the best, for the new year to you and your entire team as well.
Same to you, Anita. Thank you.
Okay, all right. Well, we'll slip into a short break on that note. When you come back, we'll continue to focus on markets and stock-specific action. Welcome back. Well, quite a few stocks moving around from the broader markets. PB Fintech, that's had a dream run in the last, I think, 10 to around 15 days. The stock has gained close to around 15%, but that's come off the high point of the day, so some profit taking out there. On the flip side, Birla Soft, well, that's been moving with good momentum. It's moved up to the high point of the day, up close to around 3% as we speak. And in India Bulls Housing Finance as well, that one's flying away, up close to around 2% as we speak. But a good time to get your CNBC-TV18 exclusive then. My colleague Parikshit Luthra spoke to Anish Shah, MD and CEO of Mahindra Group, on the company's plans to expand capacity, their launch pump pipeline, and more. Let's listen into a slice of their exclusive conversation.
We are doubling capacity in the auto business, and that's something that is based on the order book that we have, and more than the order book, the demand that we continue to see every month. So a fair amount of capacity has been put in already. By this March, we'll be at close to 39 to 40,000 SUVs a month, and then we get to about 50,000 a year after that. So we have plans in place at this point to increase capacity fairly significantly across all our lines, and that should help us meet the demand.
So this is increasing capacity within the existing infrastructure, or acquiring the Talegaon plant is also a part of it?
This is within the existing infrastructure. This does not include a Born Electric SUVs that will come on board as well, and we will look for more capacity for that.
Right. Any clarity that you could give us on the talks with General Motors on the Talegaon plant?
We are in talks with various different folks, with various different states as well. So at this point in time, until one of them is finalized, I can't say where we're going.
But that will be primarily for the Born Electric.
It will depend on what capacity we get, because a lot of it is fungible, and therefore it really doesn't matter as much as to what's Born Electric versus what size. The paint shop, etc. is same. It's just the batteries that we need to put in capacities for. So from that perspective, it makes it easier.
Talking about capex allocation, are you on track with your capital expenditure? What about FY24? Would you be increasing it? Which sectors where you would be increasing the outlay?
So we are on track right now based on the numbers we've outlined. We are generating more cash than we've outlined based on the results that you've seen. And our primary focus right now is continue to maintain the return threshold we've had and really find ways to scale up all our businesses.
You're also divesting stake from Peugeot. Almost 80% stake will be divested. Are there more such businesses?
This is one of the last ones. We had set out this categorization of ABC that you are well aware of. And this was something that was on the anvil for a while. And we've got a good partner who can take this business forward. And that's something that I think is very positive all around.
My last question, Mr. Shah, thank you for your time. British International Investments and Mahindra Group were looking and scouting for additional investors for about 500 million extra for the EV project. Where are those talks?
So we haven't started them at this stage. Our plan is to launch our XUV400 right now, get further ahead with the 5 new electric SUVs that we're going to launch. And at that point, look for an additional investor to come in.
Okay, so that's M&M. You'll get to hear more of that conversation through the day. And remember, autos continue to be in focus in today's trading session on the back of a lot of news. But it's a wrap on Chartbusters from Nigel, myself, and the entire team. Thanks very much for watching. Trading Hour up next.